Well, hello everyone, welcome back to TOOP TV and a really exciting start to the year of 2011. It's our first live show and we're standing in the middle of the parade because in the next couple of days the cyclists are going to be flashing past over the next little while, and it's the start of the Tour Down Under, and it certainly marks the start of some very exciting activities that take place across Adelaide over the next few months. Speaking of exciting, on SA's Finest, today we look at a property in Aldgate and have a chat to the owner about her gorgeous property. And for those looking to buy this year, we'll take a look at the areas which will be booming in 2011. And don't forget, we're live and interactive, so stay tuned and we'll be answering all your questions that you've sent in through the holiday period at the end of the show. Well, aren't there some exciting things happening over the next couple of weeks? And at the moment, our thoughts are with the people who've been affected by floods in Queensland and Victoria. We hope that they're safe. We hope that everything's getting back on track as soon as possible. And shortly in today's show, we'll be having a chat with John Rao, the Attorney General, about bait pricing. And now let's go to the inside story about whether the dream home ownership is over.
It's the dream many are waking up from, with more Australians being unable to obtain home ownership. Australian Bureau of Statistics figures show the gap between Adelaide house prices and wages has dramatically widened. Since 1994, Adelaide's median house price and average home loan has jumped by 233% and 195% respectively, while the average weekly earnings have only increased by 88%. These factors are having a large impact on housing affordability, which is leaving many people split on whether first homeowners should be entering the market.
Oh, I'm not really sure about that because the prices are still quite high, and I feel that unless they can have help, from parents or whatever, it's still very difficult for them to get into the market with the interest rates and etc.
I think go for it, don't wait. You could sit forever waiting for the right opportunity, and as soon as you decide, they'll go up again anyway, so you may as well bite the bullet.
In these current market conditions, the key for potential first home buyers is knowing which suburb to purchase in. Valuer General figures show median house prices in Hackham, Elizabeth East, Elizabeth Downs, Hillbank, Paraka and Paradise decreased between 5 and 10% in the past year. And for those looking to buy real estate later this year, relief will come when new land is released in the northern suburbs, which will take some pressure off house prices.
Certainly an interesting article there from Elise, and I'd have to say the lady in yellow had it spot on. I think don't wait, get on with it is the right advice at the moment, but we'll see how that goes throughout 2011. Joining me in the studio today is Michael Brown. Michael, welcome.
Thank you.
Michael, partner in PwC is
Correct.
the PricewaterhouseCoopers, rebranded recently.
Correct.
Great to have you here.
Thank you.
Michael, perhaps let's get things started with a little bit of history on yourself, how you came to be a partner and your background.
Sure. Look, I've had experience both in small and large accounting firms and joined PwC, as we're now known, quite a few years ago, to look after our Adelaide private clients practice. So part of the practice that services family-owned business, privately owned business and high net worth individuals on tax, accounting and general business advisory type issues.
Excellent. All right. Well then, perhaps to get right amongst it, how does what you do help those businesses grow and plan and so forth?
Sure. We look to provide proactive advice to our clients, so we're looking to help them as they think about the business opportunities and challenges that they're facing. So in the case of real estate, usually the sort of questions and areas that we look to work with our clients around are dealing with GST issues, capital gains tax issues, and ensuring that our clients aren't paying more tax than they need to pay. That you can't avoid those imposts, but what you want to do is make sure that you've planned and thought through the issues carefully so that you pay the appropriate amount of tax rather than more than you need to. And that requires planning, and we look to work with our clients around that.
Well, certainly none of us like to pay any more than we need to, so good work. And how do you inspire growth in business in today's times and in general?
Look, it's an interesting question because our firm's going through this "What would you like to grow" campaign. We're looking to be committed to work with our clients about assisting them in growing. We see that involving a thought process around the political, social, technological issues that they face, so that they can, when they're considering their business strategy, take the whole picture into account. You know, and we use publications like our Private Business Barometer that surveys businesses, privately owned businesses nationally every 6 months, to get a bit of a lie of the land, so that when we talk to our clients about strategies and dealing with macro circumstances like interest rates or general operational issues and technology issues, we're armed with the sort of issues and thought processes that they're facing.
Okay. You mentioned interest rates. Just your personal thoughts over the next 12 months on where we might head with interest rates?
Yeah, thanks for that.
Yeah.
I guess the Reserve Bank's saying rates are going to go up, so it'd be a game man who thinks that they're going to go down.
Yeah.
What we say to our clients, and what we're seeing our clients do, is that they're factoring interest rate costs as a business cost, and so they've taken the last couple of years to get their balance sheets right. They've reduced their leverage, and so interest rates are a necessary cost in being in business. So that's, I guess, we're factoring in a thought process that says expect a bit more rather than less.
Yeah, unfortunately, but that's life. You touched also on technology a moment ago. The changing face of technology is quite fascinating. How does that impact on private business at the moment?
Private business is no different to every other business. Technology is a fact of life, and the changes and the way in which they deal with their staff and their customers and their suppliers, technology is an important part. And we've seen that in the media recently with the discussion about online purchasing. What was interesting that came out of our last business barometer was that around 25% of private businesses using social media as an important way of connecting with their staff, their peers, their customers and suppliers. They're also spending a reasonable slice of their advertising budget in that area. Around 8% of private businesses surveyed in the barometer was spent on advertising with social media. And the other thing is staff or potential staff, just as we recruit online, they look at us online too. So having a relevant website that tells a story in a tight labour market is an important area of where technology influences what we do.
Yeah. Oh, well, short and precise and direct with websites we find is particularly good as well. Private businesses going reasonably well following the global financial crisis. Are you seeing good recovery at the moment?
We are. Like every part of the economy, there's a two-speed economy. Private business isn't any different, but generally our sense of the market, and again coming out of the Private Business Barometer, is that private businesses exited the GFC in reasonably good shape. Certainly their expectations on a 1 to 3 year cycle are for growth, even greater than that was going into the cycle, the economic downturn.
Yeah.
They're seeing funding restrictions start to reduce, so they are seeing banks more willing to loan money because the bank's credit positions have improved, but also businesses worked hard on improving its own balance sheet, and so there's more capacity within their own balance sheet to borrow. We're also seeing private business impacted by by people and the lack thereof. So a lot of issues for private business, but generally speaking, I think the picture's pretty good for Australian private business and South Australian private business.
Okay. A quick one just to come back to real estate, I guess. How do you see the private business sector influencing real estate over the next short while?
Look, it's a really good question, I guess, and the way I'd look at it is a stronger private business sector will tend to mean two things. One is more money available for purchasing property, and that obviously feeds back into the general strength of the economy.
Yeah.
But also a stronger private business sector with more people employed and therefore a greater demand for space. I guess we'll see some general uplift over time. And I'm not an expert in that area, but my sense is that it makes sense. Business will expand and therefore need more space, and that must give a fillip to it.
Makes sense to me, and I'm happy to run with it too.
Sure.
And finally, looking ahead, what do you expect of private businesses over the next few years?
I think the outlook's pretty good for private business. Business had pretty much reduced its gearing across the cycle, so it had less debt and was in a better position to deal going forward. It wasn't having to worry about what the bank was saying to it. It was actually able to set strategies for the future. I think people strategies are important. we are in a highly employed market. We don't have a lot of spare resources, so making sure you've got your people strategies in place is really important. So I think the outlook is actually pretty good for private business across the next, the next 2 or 3 years.
Okay, all right. Well, Michael, stay with us. Right now, we're going to go behind the blinds.